Good morning, everyone. Thank you for joining our webinar today. Today, we are covering the topic India UAE Trade Corridor, Business Setup and Key Benefits. My name is Ratika Dhawan, and I am the Manager in Business Development Department at MBG Corporate Services. I am delighted to be host for today's webinar. In today's session, we will learn about India UAE Trade Corridor, Business Setup and Key Benefits. Our speakers will take you through the topic in detail. Before we dive into the topic, let me introduce our company, MBG Corporate Services. MBG Corporate Services is a premier business solution provider with a proven track record of helping companies thrive in today's dynamic business environment. Our mission is to empower businesses with the tools, knowledge, expertise needed to be succeeded. Established in 2002 and headquartered in Singapore, we are a team of 600 professionals operating out of Europe, Middle East, Asia, with a network of 16 global offices across 8 countries over the past 2 decades. We have served more than 5,000 clients global level, including 100 of the Fortune 500 companies in regions such as Middle East, Europe, Japan, China, Singapore, and India. With an innovative approach to every project and an unwavering commitment to quality and consistency, we have played an instrumental role in transforming businesses worldwide. MBG Corporate Services operates with specialized international enterprise teams dedicated to assisting clients in various geographic regions across the globe. These teams focus on providing tailored services and support to clients based in specific regions, including India, Japan, Middle East, China, and Europe. We established dedicated teams for these key geographic regions. MBG Corporate Services demonstrates a strategic approach to understanding and meeting the distinct needs of clients in different parts of the world. This enables us to provide more effective and targeted services, fostering stronger client relationships and successful outcomes in each region. Now, what makes an MBG different? What sets us apart is a 360 advisory approach. By integrating multidisciplinary perspectives, we ensure our clients get well-rounded solutions to complex business challenges. This holistic approach leads to tailored strategies for growth and compliances for every company. End-to-end solutions to the business growth. We can support businesses across their life cycle from pre-launch to growth, shakeout, and beyond. The solutions cover every stage of the business life cycle from pre-launch feasibility studies to market entry, risk management, transaction, expansion strategies, etc. Whether you're looking to diversify, increase profitability, or enter a new market, we have expertise to guide your journey. Now coming to our services. The first service is Audit and Assurance Services. So coming to the Audit Assurance Services, we can help the clients conducting audits to ensure the accuracy and completeness of financial statements, providing assurance to stakeholders. Risk advisory, conducting comprehensive risk assessment and developing risk management strategies tailored to specific industries and organizational needs. Taxation services, starting with indirect taxation, we can support the client with comprehensive indirect taxation solutions, including advisory on GST applicability, structuring and transactions for tax efficiency, compliance management, return filings, audit support. We can also assist you in identifying tax optimization opportunities, handling departmental notices, ensuring seamless compliance with evolving regulatory requirements, along with minimizing risk and enhancing the operational efficiency. Coming to direct taxation, developing efficient strategies to minimize tax liabilities, optimize financial resources, assisting in tax compliances, filing tax returns, and liaising with tax authorities on behalf of our clients. Then we have mergers and acquisitions. The firm offers services including target screening, financial commercial due diligence, business valuation, deal structuring, regulatory compliance and support. We can help you in negotiation, risk assessments, post-mergers, value realization, etc. Legal advisory, it includes company setup, contract drafting, regulatory compliance, risk management. We can help ensure the client meets all the legal requirements while operating efficiently and minimizing the potential risk. strategy and transformation. We can help clients define growth strategies, improve operations, drive transformation through market entry planning, business optimization, performance enhancement, enabling sustainable and efficient business growth. Last, technology advisory. Under technology advisory, we can help our clients aligning digital solutions with business goals, including IT strategy, system implementation, process automation, data analytics, which enables improving the efficiency, better decision making, and scalable growth. On the screen, you can see the list of diversified industries we have worked with. MBG Corporate Services is an industry agnostic firm with expertise in serving clients from various business industries. This approach allows us to provide comprehensive and customized solutions that cater to the unique needs and requirements of clients across different sectors and domains. By serving clients across these diversified industries, MBG Corporate Services demonstrate its versatility and ability to adapt to the distinct requirements and regulations of each sector. Now, allow me to introduce our first esteemed speaker, Mr. Anil Shah, who is a senior manager with Corporate Secretarial team, to start with the webinar. Mr. Anil Shah is a corporate professional with 10 years experience in corporate secretarial and regulatory services. He's a commerce graduate, a qualified company secretary, and holds a postgraduate degree in business policy and corporate governance. He specializes in the India market, entry and cross-border structuring, advising foreign investors on stabilizing and scaling their presence in India. He has successfully advised clients on a wide range of matters, including company corporation, joint ventures, licensing, branch, project offices, due diligence, secretarial audits, capital market transactions, mergers and amalgamations, along with regulatory compliance of NBFCs, LLPs, and unlisted companies. Mr. Anil has an extensive experience in licensing with key regulatory authorities, such as Ministry of Corporate Affairs, Register of Companies, Reserve Bank of India, and National Company Law, ensuring seamless execution of cross-border transaction and regulatory approvals. He has been instrumental in enabling foreign and domestic businesses to enter, structure, and grow in India, providing end-to-end support from setup to scale. From here, I would like a speaker, Mr. Anil Shah, to take ahead the webinar.
Everyone, thank you so much, Ratika, for the introduction. Welcome to today's session on India UAE Trade Corridor, business setup and key benefits. This discussion comes at a pivotal time as the India-UAE relationship is rapidly evolving into a highly integrated trade and investment corridor, creating significant opportunities for global businesses. In today's webinar, while I will be covering business setup in India, my colleague Mr. Nigam will discuss the key benefits under SEPA from the India perspective, and Ms. Jui will take you through the UAE side of business setup, formalities, and SEPA. Let's start with understanding on SEPA. SEPA represents one of the most advanced forms of international trade agreements. SEPA was India's first trade agreement with a country in Middle East and North Africa region, with expectation to boost trade between the two nations. It goes beyond the traditional trade deals and focuses on deeper economic collaboration between the countries. At its core, it creates a more integrated ecosystem where businesses operate with a greater connectivity rather than in isolation. From a business standpoint, this translates into tangible benefits, easier market access, increased trade efficiency, and support for employment and income generation, especially for exporters. Another key strength of SEPA is its broad coverage. Most trade deals are just about free trade agreements, which focuses on lowering tariffs on physical goods. However, SEPA goes beyond goods and includes services, investment, intellectual property, and regulatory frameworks, creating a much more comprehensive operating environment. At the same time, it brings clear commitments around tariff reductions, removal of non-tariff barriers, ensuring that the benefits are actually implemented. Ultimately, SEPA strengthens the India-UAE relationship and supports a more stable long-term economic partnership. If you look at the current landscape, the strength of India-UAE partnership is quite evident. The trade between two countries has already crossed $100 billion in 24-25, with a clear target of reaching 200 billion by 2030. And SEPA is a key driver behind this momentum. From an investment perspective, the UAE is the sixth largest investor in India, contributing around 6.5% of India's total FDI. Both the countries have established India-UAE SEPA Council, which is a bilateral platform established by the government of UAE and India to support and strengthen the implementation of the India-UAE SEPA. This is further supported by institutional players like Abu Dhabi Investment Authority, DP World, Abu Dhabi National Oil Company, who are actively contributing to infrastructure and economic development. From India's side, the advantages are clear. A large consumption market, a growing manufacturing base, and the ability to offer a scale and resilience. So overall, this corridor is built on trade, investment, and a strategic alignment, making it highly relevant for global businesses. Building on that, let's look at why India stands out as a strategic investment destination. At the very foundation is access to 1.4 billion plus consumer market. This is just not about size, but also about rising demand and increasing consumption, which gives businesses immediate scale. The second factor is the policy support. India has very proactive with initiatives like Make in India, production link schemes, and continued investment in digital infrastructure, all of which are designed to attract and support foreign investment. Then comes the operational advantage. Businesses benefit from cost-efficient operations supported by a large pool of skilled and capable workforce, which helps in maintaining both quality and competitiveness. And finally, India is becoming increasingly integrated with global supply chains. This is particularly important today as companies are looking to diversify and build more resilient supply networks. Once we understand the opportunity, the key question is how to enter the Indian market. India offers multiple entry routes, and honestly, the choice depends on your business objectives, whether it's long-term presence, partnership, or a limited setup. While the regulatory framework is well defined, it does require careful navigation on account of compliance requirements. Also, entry conditions can vary by sector, so FDI regulations need to be evaluated as well. Most importantly, the right structure is critical because it directly impacts taxation, compliance, and operational flexibility. Next slide. Let me briefly outline the key market entry options available in India. These includes joint ventures, wholly owned subsidiaries, limited liability partnerships, as well as entry-level options such as license offices, branch offices, and project offices. Broadly, the first three are long-term structures, while the later three are more entry-level or limited set purpose setups. Each option differs in terms of control, investment, and regulatory requirements. I'll now discuss each of these at length. Next slide. Starting with long-term structures. A joint venture involves partnering with an Indian entity, sharing ownership, control, risks, and returns. This works well when local expertise is important. Whereas in case of wholly owned subsidiaries, it gives full control to the foreign investor and operates as a separate legal entity, ideal for businesses looking for an independent presence. The next is limited liability partnership, or we call it as LLPs, offers flexibility with limited liability, but its suitability depends on sector-specific FDI conditions. Now moving to entry-level options, the three options are license office, branch office, and project office. Liaison office is used for communication and market research with no revenue generating activities. But in case of branch office, it allows certain commercial activities, but it is not a separate legal entity. So the parent company remains liable. And in case of project office, it is set up for a specific project and is temporary in nature. So overall, the choice depends on level of commitment and business objective. Next slide. Now that we have covered the structures, let's briefly look at the process of setting up an entity like wholly owned subsidiary, joint ventures, and LLPs. The process begins with obtaining digital signature certificates for the proposed directors or partners. This is followed by name reservation, where the proposed entity name is applied for approval. Once the name is approved, the next step involves drafting and preparing incorporation related documents, including constitutional documents and declarations. For foreign investors, an important step here is the notarization and apostillation of documents executed outside India. Once this is done, the incorporation application is filed with Registrar of Companies. Upon approval of the application for incorporation, the entity is officially incorporated, and finally, statutory registrations such as PAN number, TAN number, and other compliance requirements such as EPF, ESICs are obtained. So, while the process is quite structured, it requires careful documentation and regulatory alignment at each stage. Let me now walk you through the process flow for setting up liaison office, branch office, or project offices in India. The process begins with identifying an authorized representative and obtaining his/her PAN number from the income tax authorities. Once that is in place, the next step is to apply for a PAN-based digital signature certificate, which is required for regulatory filings. In parallel, the company can start collating and preparing the necessary documents for setting up the office. Since these documents are typically executed outside India, they need to be notarized and apostilled to ensure legal validity. The next key step involves submitting an application to the authorized dealer bank, which will then seek approval from the RBI under FEMA regulations. This is usually a back and forth with the AD bank during this stage to ensure all requirements are met before approval is granted. Once RBI approval is received, the company needs to establish its office in India within a period of 6 months, which begins with proceedings to file the registration application with the Registrar of Companies in Form FC1. Finally, there is liaison with ROC to obtain approval for establishing the place of business in India. So while the process is sequential and well defined, it involves coordination with multiple authorities, particularly the AD Bank, RBI, and Registrar of Companies, making documentation and compliance critical at every step. Now, before I conclude my session, let me quickly summarize the key takeaways and way forward. First, the CEPA agreement acts as a strong catalyst in strengthening India-UAE trade and investment flows, creating a more seamless business environment between the two countries. Next, India offers a highly compelling and scalable business setup environment for global businesses supported by strong fundamentals and policy initiatives. What we are seeing is a clear momentum towards strengthening cross-border trade and investment flows, making this corridor increasingly relevant for businesses looking to expand. By leveraging CEPA effectively, businesses can unlock competitive advantages, particularly in terms of market access and cost efficiencies. And finally, one of the most important aspects is structuring your India entry correctly with a focus on long-term sustainable growth. With this, I conclude my session. Thank you for your patient listening. Over to you, Rathi.
Thank you, Mr. Anusha, for an insightful webinar on your. Now, allow me to introduce our second esteemed speaker, Mr. Nigam Goyal, who is Senior Manager with Indirect Taxation Team. Mr. Nigam Goyal He is a former practicing chartered accountant belonging to the Institute of Chartered Accountants of India. During his illustrious professional career on consulting side, he has held important assignments in India, such as consultant in relation to auditing, accounting, taxation advisory services. He has also represented before various departments as Income Tax Office, Central Excise Department, and GST Office regarding handling of notices. Now, employed with MBG Corporate Services as Senior Manager in Taxation and Advisory Services. He advises on direct and indirect taxation laws. He regularly appears before Income Tax and Goods and Services Tax Department in matters relating to taxation and related disputes, besides handling legal compliances for the clients as well. In addition, he advises MBG on various of the complex matters relating to taxation matters. He has an experience of GST awareness, knowledge sessions for several business councils, CEOs, CFOs from various sectors in India. He has an experience in designing and delivering comprehensive classroom training sessions to colleagues covering tax laws, tax issues, auditing policies, and procedures. He also brings on table a significant experience in conducting tax due diligence and risk assessment engagements, assisting clients in identifying potential exposure areas and ensuring regulatory readiness. I welcome Mr. Nigam Goyal. From here, I would like to invite the speaker to take this webinar.
Good afternoon, everyone. And thank you, Ratika, for the introduction. And thank you, Anil, for giving insights with respect to company formation and the regulatory compliances emerging from SEPA. So today, I will be discussing a landmark development in international trade, the Comprehensive Economic Partnership Agreement, SEPA, between India and UAE. My goal today is to help you understand the vast landscape of custom benefit, export incentives, and subsidies available under this treaty. Whether you are an exporter of goods or a professional service provider, understanding these framework is essential for identifying potential exposure areas and ensuring regulatory readiness. So if we talk about the meaning, what is SEPA exactly? What makes SEPA different from a standard free trade agreement? While an FTA focuses primarily on reducing tariffs on goods, a SEPA is holistic. It's about partnership. It covers everything from services and investments to intellectual property and digital trade. It's designed to weave out two economies so closely together that growth in one naturally fuels growth in the other. As we mentioned in the slide, that it is all about trading goods and trading services, how we promote the investment flows between the two countries, strengthen economic cooperation across sectors, and strengthen bilateral relationship by doing the business across borders. So let me give you an overview. To start, let's define what we mean by SEPA. It is not just a simple trade deal. It is a full economic relationship framework designed to increase trading goods, liberalize services, and promote investment flows. It is a broad economic treaty that strengthens bilateral relationship across multiple sectors. From an operational standpoint, the agreement provides a uniform definition of terms of both parties, ensuring clarity in cross-border transactions. It establishes specific rules of origin to determine which products qualify for benefits and defines the geographical scope and applicability of these rules. So rules of origin is important here in SEPA. To prove the rules of origin, we have to submit certain compliances and with documents with respect to indirect tax authorities. Essentially, it covers everything from physical trade in goods and services to the protection of intellectual property rights also. So there are three main pillars we will be discussing in further slides regarding that trading goods, trading service, and intellectual property, which all about the. So if we talk about the economic logic, why countries sign SEPA? So why do countries enter into these agreements? The logic is rooted in mutual growth. SEPA allows domestic companies to access much larger foreign markets, which in turn improves the competitiveness of local industries as they adapt to global standards. By attracting foreign investment, SEPA helps bring in capital and generate employment. Diplomatically, it fosters favorable relations between countries. For your business, this means a more predictable and supportive environment for expansion. As seen in similar models like India and Korea SEPA, the ultimate goal is to facilitate preferential trade through reduced duties. So it is basically attract investment, strengthen strengthen diplomacy and increase competitiveness along with the as compared to other countries. So here are the key plus which I talked earlier in the previous slides. So SEPA stands on three main pillars. The first is the trading goods, where the primary benefits are the reduction on or elimination of tariffs and removal of quotas. This is particularly beneficial for industries like textile, machinery, and chemicals. So as we have mentioned that which will be cost effective and faster producers. The second pillar is trading services, which is a major part of this agreement. It allows for national treatment and non-discrimination, facilitates the movement of professionals, and boosts digital services. This impacts sectors like IT, banking, and consulting. Finally, the third pillar is intellectual property rights, ensuring the protection of patents, trademarks, and copyrights to encourage innovation and technology transfer. Also, SEPA is not just about for the physical goods. It provides enhanced market access in various service subsectors, including professional services, easier movement for Indian consultants, engineers, and legal professionals. National treatment, Indian service providers are treated on par with local UAE businesses in many sectors, ensuring they are not discriminating against in government procurement or licensing. So here's the main purpose which we are doing this session for, especially from my side. So what are the exactly custom benefits and tariff facilitation? So here I have divided into 6 to 7 bullet points, which I will be able to introduce the major benefits with respect to custom and export, and also incentives and subsidies in further slides. So customs related benefits are one of the most important features of SEPA, especially for exporters and importers. Now let's dive into the specific custom benefit. The most immediate advantage is tariff elimination of reduction. By providing preferential tariff rates, your products become significantly more competitive in UAE market. As we can see the key main benefits, this makes products more competitive in the partner country. Beyond cost, SEPA focuses on trade facilitation. We are moving toward simplified customs processes, which include electronic documentation, pre-arrival processing, and risk-based inception systems. These measures reduce paperwork and ensure the faster release of goods at ports, ultimately lowering your logistics time and cost. Transparency is also a key. Agreement allows for advanced rulings on classification valuation. If anyone has any doubt, then they can move forward or they can apply for the advanced ruling from the department. So here, department means CBIC department, which is pertaining to indirect taxation in India. So these measures reduce paperwork and ensure the faster release of goods at ports, ultimately lowering your logistic time and cost. Transparency is also key. The agreement allows for advanced ruling, as I mentioned. Next is for rules of origin and refunds. So another critical layer involves duty drawback and refund mechanism. This allows for the refund or exemption of duties on inputs used in exported goods, effectively avoiding double taxation. So how can we move that this type of benefits? Suppose we are an exporter and we have to export the goods without payment of tax. So suppose if our output liability is tax free, then why inputs are being taxed? So for this, there is one benefit provided by Government of India that if you are exporting goods on without payment of tax, whatever you purchase the goods, you will be getting a refund while applying online through GST portal. So this is one of the major facility which it is emerging in past also, but in India SEPA agreement, it is smooth now. So to ensure these benefits stay within the partner countries, we have preferential rules of origin that in short we can say ROO. To qualify, goods must meet minimum value addition threshold, often between 30 to 40%. This prevents third countries from simply routing goods through a member country to misuse the agreement. Furthermore, mutual recognition of standards and certifications means exporters can often avoid repeated costly testing in importing country. So investment promotion and economic cooperation is another benefit. Next, please. So investment promotion and economic cooperation regarding SEPA also provides a robust framework for investment promotion. It ensures stable rules for foreign companies, easier movement of capital, and protection against unfair nationalization. This encourages joint ventures and brings in vital foreign currency inflows. On a broader scale, the agreement fosters economic cooperation in high growth sectors like technology, infrastructure, energy, and research and development. Under SEPA, countries are treated with most favored nations status, providing a global presence and ensuring that our economic ties are prioritized and protected. Next, please. So now we will talk about the necessary incentives which we will be available through this agreement. So they are the four major points: market access incentives, investment incentives, service liberalization, MSME, and startup boost. So beyond custom duty benefits, CEPA provide broader economic incentives also. Moving to incentives, the agreement provides preferential entry into partner markets and liberalization of services. There is a specific boost for MSMEs and startups, reducing their compliance burden and helping them participate in global value chains. Regarding subsidies, the treaty includes dedicated articles to eliminate export subsidies that might distort trade. While certain products enjoy zero tariffs, the agreement also reviews treatment for services-related subsidies. A special point to note: where subsidies are granted, they are generally available only to domestic service providers and natural persons who are citizens of India. Under CEPA, nearly 97% of UAE tariff lines have been opened for Indian exports. This means that a large number of Indian goods are now enter the UAE market at zero or reduced custom duty. For exporters, this translates directly into cost savings and better price competitiveness. In practical terms, this functions very much like an indirect subsidy, not a direct way, but yes, of course, it is an indirect subsidy. How it is indirect, we can explain. So, if we talk about tariff rate quotas, TRQs in short, India has provided selective concessions to the UAE under controlled limits. A notable example is gold imports, where a fixed quantity can be imported at a reduced duty rate. This ensures a balanced tariff balance, facilitating trade while still protecting domestic industry. Third, preferential market access. CEPA opens the doors for Indian industries such as gems and jewelry, textile, leather goods, engineering products, agricultural commodities. These sectors now enjoy easier and more competitive access to the UAE market, which boosts exports and revenue. Fourth, rules of origin, which I have talked about earlier. To avail these benefits, products must meet specific origin criteria, ensuring that only genuinely Indian goods qualify. So this protects the integrity of the agreement and ensures that benefits is the intended producers. Which I am talking these about the benefits which relates to the indirect benefits of subsidies. Fifth, services liberalization. CEPA is not limited to goods. It provides Indian professionals and companies access to over 100 service subsectors in the UAE, including IT, finance, healthcare, and education. This is a major advantage, specifically for India's stronger service sector. Sixth, investment facilitation. The agreement promotes a transparent and non-discriminatory investment environment. This encourages cross-border investments, creating more business opportunities and economic growth. Again, the trade facilitation. CEPA simplifies producers through faster custom clearance, reduced documentation, digital certification systems. So these are the major benefits also in CEPA, that balance of payment, restriction to safeguard on balance of payment. These safeguards are not arbitrary. As you can see on the table, that any restriction must be proportional, temporary, and non-discriminatory. We have built in regular reviews to ensure these measures are phased as soon as the economic situation improves. This provides a safety valve that gives businesses and governments the confidence to trade aggressively without fear of unmanaged risk. So here the risk is also reduced by introducing this agreement between the two nations. So we can rewrite that in the event of serious unfavorable balance of payments and external financial difficulties, certain restrictions shall be made. The restrictions shall be consistent with the articles of agreement or the International Monetary Fund. Actually, in CEPA, there are many articles which defines the layoff or which defines the particular subsidies or incentives and the balance of payment regarding criteria. Second is be applied in such a manner that the other party is treated no less favorably than any country that is not party to this agreement. Avoid unnecessary damage to the commercial, economic, and financial interest, and be temporary and be phased out progressively. Now we will discuss about the compliances, how we can move or how we can take the benefit with respect to this agreement if we are importer or exporter. So we must discuss about the compliance. Two benefits of CEPA are not automatic. To claim them, businesses must often obtain a proof of origin or certificate of origin, we can say, in short, COO. It is also your responsibility to ensure correct HS classification and comply with customs valuation rules. Exporters must register on DGFT's common digital platform. So there is a specific portal called DGFT. So we have there we can register or we can apply for the application. To apply for certificate of origin also, this digital document must be presented at the time of UAE customs clearance to avail of the concessional duty rate. Failure to comply with these requirements can lead to denial of preferential duties, penalties, or reassessment. Additionally, the agreement includes safeguards in the event of serious balance of payment, as I have shared earlier, because while we are making this application, we must aware about all these conditions. So if we talk about the certificate of origin in detail, or I can explain in a more deep manner. So what is basically certificate of origin? The certificate of origin is a crucial document because it determines whether goods are eligible for preferential tariff benefits under CEPA or not. Under the agreement, the CEO certificate of origin must follow a standard format prescribed in Annex 3E under the agreement. It includes key details such as the HS code, description and quantity of goods, name of the exporter consignee, country of origin, and the applicable origin criteria such as value addition or change in tariff classification. Importantly, the certificate must be issued in English language and it must carry a unique serial number, ensuring traceability and authenticity. The document is issued by a competent authority in exporting country and must bear an authorized signature and official seal. It is valid for single import transaction, although it may cover multiple products. To maintain accuracy, the certificate of origin must include references like the invoice number and date I have mentioned earlier, and it must be submitted within its validity period. Now, CEPA also provides flexibility in genuine cases. For example, if the certificate is delayed due to a force majeure or circumstances beyond control, it may still be accepted even after expiry, provided the goods were imported within the original validity period. Similarly, in exceptional situations, certificate of origin can be issued retrospectively within 12 months of the shipment, clearly marked as issued retrospectively. In case the certificate is lost or destroyed, the certified true copy can be issued, ensuring continuity of trade without disruption. The agreement also emphasizes data integrity. No erasures or overwriting allowed. Any corrections must be properly authenticated. However, minor errors such as typing mistakes do not invalidate the certificate as long as the core information remains accurate. To conclude the certificate of origin, CEPA is not just a formality, it is a gateway to availing tariff benefits, and its proper issuance and handling are essential for smooth, compliant international trade. So thank you for patient listening.
Thank you so much, Mr. Nick. Now, allow me to introduce a third esteemed speaker, Ms. Juhi Dongre, who is Director Legal in UAE. Juhi Dongre is a Director at MBG and has an excellent experience with corporate matters. She is a qualified practicing advocate in India, having completed a Bachelor of Law from Mumbai University in 2017 and then pursued a Master's in Oil and Gas Law from the University of Aberdeen, the United Kingdom, in 2018. Juhi has been representing clients at an Indian court since 2017. She is an experienced corporate lawyer. She excels at drafting contracts, agreement consultancy, criminal law cases, restructuring of many companies facing imminent bankruptcy and negotiations. Having worked for several firms and companies in India and the UAE, she finds herself serving a clientele with an approach that always works. She can write, read, and speak English, Chinese, Hindi, Marathi languages fluently. I would like to invite our speaker, Ms. Juhi Dongre, to take this webinar ahead. Ms. Juhi, over to you.
Thank you so much, Ratika, and very good morning, very good afternoon to everyone, whoever is joining us from all over the locations. My colleague is presenting the screen. So while it is being put up, so I just want to mention a few, very few things as to what things to be remembered and kept in mind when setting up a business in UAE. So when someone looks at UAE, the first question is usually, where do I even start? So in reality, there are three main routes. One is mainland, free zone, and an offshore entity. So each one opens a very different door. Mainland is mostly direct. If your goal is to trade inside the UAE, reach local customers, or even build a physical presence, then mainland will be the preferred route. It gives you access to the full market, which is why many traditional and growing businesses choose mainland jurisdiction. Now, free zones are more like business communities which are built around specific industries, finance, logistics, trading, or for that matter of fact, even media. Now, each of these are designed specifically to make your setup easier and attract global companies. So we can think it of as a plug and play business environment. Now, offshore is completely different again. It's not about operating in the UAE market. It's more about holding structures or international planning, managing assets efficiently. So before anything else, the actual question is very simple. Are we here to operate locally or we want to operate on an international scale? So the answer that derives is that we have to first of all see and what kind of question that we are answering to. Now, when we are choosing between mainland, free zone, and offshore entities, as we can see on the screen, these are quite distinct features from each of the three potential legal forms that we have. Now, it all boils down to one question: where do we want to do the business? Again, so if we want to have full access to the UAE market, mainland is a clear choice. If our focus is international or a industry specific ecosystem, free zones are attractive. But if we have any holding or investment or international structuring, offshores are quite the preferred choice. So even the way that we set up the office, it reflects in this difference. So mainland expects a physical presence. Free zones give flexibility when it comes to having your office virtually as well. And offshore entities don't require office at all. So the office address of the agent is required or taken as an office address in this thing. Now, how do we do business in UAE and what kind of legal forms that we have? As my colleagues in India have also very, very well explained as to what kind of legal forms we have in India as well. So it is more on a similar front. So in mainland, we have limited liability companies. Again, because it is very simple, flexible, and it is widely accepted. Free zones are more standardized. They have FZCO and FZE companies, and we have offshore companies as well. But then what kind of licenses that we have? So we have four major types of licenses in UAE, which is a commercial license, service license, industrial license, and tourism license. Now, when it comes to free zones, each emirate has a different type of free zone. Now, what we see on our screen right now are three important or three top free zones, I would say. Jafza, which is built around logistics, manufacturing, and international trade. DIFC is quite different. It is more of a financial city within a city. So it's focused more on banks, funds, professional services, and it has its own legal framework. DMCC is often the choice for trading companies or startups who want to especially trade in commodities like gold, diamond, and even general trading. Then the next emirate is Abu Dhabi. Now in Abu Dhabi, Kizad is similar to what we have in Jafza. So it is more focused on industrial and logistics activity. ADGM, again, it's a financial hub in comparison to DIFC, which is Dubai International Financial Center. And 2454, again, it is on a media and creative industries. The northern emirates that we have, which is Ras Al Khaimah and Sharjah, Al Quwain, we have Rakes, we have Safe Zone, which are more on a cost-effective setups, attracting more of SMEs and even manufacturers. So we do have in UAE a more specialized ecosystem which works in parallel, and all the emirates give proper efficiency. Now, my colleagues have very well explained as to what the entire concept of SEPA is and how UAE and India will be impacted. So I'll just quickly make very quick points. It's at its core, it's basically making trade easier and faster between these two countries. And it goes beyond goods. It covers services, digital trade, investment, IPR. So it's not just a trade deal between two countries. It's like a long-term economic partnership. So Indian goods which are exported through UAE, they become significantly more competitive due to reduced or removed tariffs under CEPA altogether. So this improves pricing and it increases the trade flow as well. So it is typically strengthening the relationship between UAE and India when it comes to trade. Now, why SEPA matters? So from a UAE point of view, it's more than a trade agreement. It is strengthening UAE's position as a global gateway between all the continents, and it is becoming a major strategic advantage. Now, UAE is trying to move further away from oil dependence and it's increasing its sectors when it comes to trade, logistics, manufacturing, and services. Another key benefit is, of course, investment. Many Indian businesses are actually now using UAE as a base to expand regionally and globally. It is creating a lot of opportunities in for SMEs as well, which is very important and a backbone for the UAE's business ecosystem. So I believe this entire trade agreement is turning our present situation into a potential and then a cross-border opportunity. So there are many things that will be coming out of this particular trade agreement. With this, thank you so much for joining. And it was great insights that we have from all our team. Over to you.
Thank you, Juhi, for such an insightful description. And thank you, everyone, for the patience listening. Thank you all the esteemed speakers, Mr. Anil Shah, Mr. Nigam Goyal, and Ms. Juhi Dongre for sharing such valuable insights on to India-UAE Trade Corridor, business setup, and key benefits. Your expertise has provided us with a deeper understanding of this crucial aspect of the topic. I hope our audience found the information shared today informative and beneficial for the business operations. If you have any further questions or require assistance, you can reach out to us at communications@MBG. Thank you once again for joining us. We look forward to a continued and new collaborations. Thank you, everybody.